Adept IT has grown headline earnings per share by 35% for the year to December. That was off the back of a 38% rise in turnover as the IT Solutions and Services Group expanded its business. Well, joining me with more is CEO Sbu Shabalala. Sbu, thanks very much for coming in today. So a good year, strong year for you. It was bolstered by those acquisitions. So you bought Sbu Vision during the year, and that contributed a few months to these results.
Yes, Stephen, I think we're quite pleased with the results, especially because it's not only acquisitive growth with Sbu Unison that has contributed. Our underlying business grew about 11% in the numbers that we're reporting, so it's quite a pleasing set of results.
How are you aiming for growth going forward? Is it going to be through a mixture of acquisitive and organic growth?
Our strategy has a mixture of organic as well as acquisitive, but we achieving synergies in the businesses, and that's why we've seen our margins improve from around 10% to 14.5%. And those synergies, as well as our uptick in services, we're expecting a lot of organic growth to come through. If we supplement that with acquisitive growth, then we are happy that we'll achieve the results that we've been able to achieve in the previous year.
When you talk about synergies between the businesses, you work in four main sectors: financial services, manufacturing, energy, and education. Are you talking between the different sectors as well?
Oh, yes, certainly. What we are finding is that the services we offer in the different sectors are relevant to others. So we taking technology from the one sector into another. A classic example is taking our telecom solutions from financial services into manufacturing. And this is what the business of Sbu Unison, which is a business that's running software as a service, is doing to our group.
So when you talk about your operating profit margin improving from 10.8 to 14.5%, is there scope for further growth there?
Well, we believe we've got very strong margins, and obviously our services are under pressure. And this is from some of our units which are exposed to the energy sector, especially with the oil price being what it is at this point. But we certainly want to continue to improve our margins. We are really at where we're targeting our margins to be.
So are you already seeing pressure on the energy businesses because of that fall in the oil price?
Well, it's a mixed bag. I think we're seeing pressure on us increasing our rates in that sector. However, our services have become quite relevant because we manage the supply chain for energy businesses, for oil and gas businesses, and it's become important that they extract efficiencies within the supply chain management solutions.
So in periods like this, you used the energy sector as an example, but we have slowing economic growth here in South Africa, not looking great, and other geographies where you operate also seeing slower growth. Does that make less customers use you, or do more customers come to you to try and extract synergies and benefits from you?
What we're seeing is more companies paying attention to extracting efficiencies within their own businesses, and that's what our systems enable the businesses to do. But further, what we're also doing is expanding outside of the South African borders, and we're seeing greenfields projects that we're supporting in geographies outside of the South African market. We have a SADC presence where we're targeting the SADC markets from our South African business, as well as looking into East Africa as a port where we can actually set up a business and continue to grow.
Well, at the moment, 78% of revenue still comes from South Africa, so still a small contribution from the other operations, rest of Africa 10%. What sort of balance would you like to see there going forward?
Well, these numbers are always skewed by the acquisitions we make. So with the Sbu Unison acquisition, the business predominantly is a South African business, and therefore we've regressed somewhat from the 75% that we had last year. However, it's a good thing, because what we're finding is taking the solutions that we take into the Africa market, we have to create a larger basket than what we are taking in order for us to be relevant to our clients in the Africa market. So the target that we've set is to start improving it over time to be at around 30%.
Okay. A small deal you've done post-year end, it's a New Zealand deal, education business. It was just over 7 million rand. But interesting funding for the deal, because you funded this deal plus part of the Aspivia deal by selling shares for cash to black investors. Is this a model you're looking at? Certainly.
We stated that we want to improve our PE statistics, especially on the ownership side. And as part of the capital raising that we did, we issued shares to the tune of around 42 million to black investors. And these are black investment companies that have come and taken Adapter IT script for cash. And this has allowed us to then execute on the transactions that we have already secured. But we're looking to this model going forward, where we're introducing new shareholders through the issue of script, whilst improving our BE statistics. And we believe it's a very good model for our business.
How about the dilutionary effect it has for other shareholders, though?
We always link that to earnings. We're always looking for earnings accretive transactions to fund. So it would never be dilutive to the existing shareholders if it's to buy businesses that we are putting into our platform.
Focus for 2015, more deals on the table, or are you going to be bedding down the current deals and expanding organically?
We have a team which specializes in integrating existing businesses, and that's what we do. We focus in ensuring that the synergies are extracted within the business, and therefore the margin improvement that you've seen. However, we can't ignore the opportunity that exists in the market for consolidation, and that's what we're taking advantage of. And we will continue to seek such synergistic companies to join our business as we grow.
So I think what you're saying is watch this space. Sbu, we have to leave it there. Thank you very much for coming through.
Thank you, Stephen.
That's Sbu Shabalala. He's the CEO of Adapter IT.